Monday, September 28th, 2020, Maneco 64, home of alternative economics and contrarian views. So, the World Gold Council, are they really a friendly organization towards the precious metals, real physical gold and silver? I would say not. I don't trust the World Gold Council, and they've come out in the FT. There's an article in the FT today. It's quite balanced, I would say, for gold. It's not really disparaging as usual for the FT, but I noticed that they're pushing a lot of the ETF story here. They also are pushing platforms that I know don't provide for physical delivery, platforms that just bet on the price of gold and silver. And I've said for many years that the key to holding precious metals is to having physical gold and silver. Yes, you can store it with a third party, but you have to make sure it's outside the banking system and that it is allocated, that it is in your name. The last thing you want to do is invest in ETFs because there's too many counterparties and it is a banker security. It is created by the bankers and you can't trust any of the banks. So yes, not a bad article in terms of talking about gold. They admit that gold has been one of the best performing financial assets since 2008, right? They do admit that. Towards the end, they talk to a trader and he says there is danger being short gold under the current circumstances. They're also pushing this theme that Asia is selling a lot of gold, that the Chinese and the Indians are not buying gold. All the demand is coming from the West. And the other thing I would say about gold is that supply and demand is not as important because all the gold that's ever been mined in the world is still above ground. Very little has been consumed. And what pushes the price of gold up or down is fear or lack of fear. Lack of fear pushes it down, I would say, and fear about what's going on. Loss of confidence in central banking also pushes the price higher. So we got the FT, who's brought along the CEO of the World Gold Council. And it says, Mr. Tate says he believes new financial products backed by gold. See, it's not real gold. It's backed by gold. And you won't be able to convert it into real gold. In India and China will grow exponentially over the next few years, aligning the markets with the West. Well, that's a bad thing because the Western gold market is totally, I would say the financial Western gold market, the ETF markets, is a sham. The gold futures as well is a sham, right? There's no real gold and silver there, or if there is, it's highly leveraged. And he adds that would better link Asia's gold markets with Europe and the US. Why would you want to do that? And I continue. He says, all quarters of the world gold market will be fully optimized at that point, says Mr. Tate, a former investment banker. Western institutional and retail, as well as Eastern institutional and retail investors, will all come online over the next couple of years. So you see, the World Gold Council is pushing for digital gold, not real gold. And I wonder if the Indians and the Chinese will fall for this. Hopefully not. So let's look at who this guy is. David Tate, right? World Gold Council, Chief Executive Officer. Headquarters, London. Not good. I know I'm in London, but this is not good. Let's read about him. He's been the CEO of the World Gold Council since February 2019, right? During 30 years in the financial industry, David has worked for a variety of reputed firms, most recently as global head of fixed income macro products at Credit Suisse. Well, that's one of the too big to fail banks. How can it be a reputed firm? Prior to that, he held senior trading roles both at Credit Suisse and UBS investment banks. These are the too big to fail banks, right, that have been bailed out many times over. David began his career trading at Goldman Sachs. Well, my goodness, there you go. And this is the kicker about David Tate, who's pushing paper gold, right, not real gold. He's the FT would never tell its readers that the best way to own gold, especially in the UK, is to have some gold sovereigns, right? Because they want you to stay within their financial system so they can keep ripping you off. He is currently an independent member of the Bank of England's FICC Market Standards Board. So there you go. That tells you everything you need. He works within the central banking City of London banking system. And this guy is pushing for these ETFs, right? He's no friend of gold, David Tate, not in the sense that we look at gold as an insurance and protection versus this fraudulent financial monetary system that we have. So yeah, I would say it is a fairly balanced article by the FT. If you have access to the FT, you might want to read it. It says the new gold rush, Western investors offset soft Eastern demand. And it says, as ETFs help push the price to record highs, Indian and Chinese consumers are selling the precious metals. I don't think it's really ETFs that are driving the price of gold higher. I think it's real physical gold, buyers of real physical gold, very wealthy individuals, very wealthy families getting into physical gold because they know that ETFs are no substitute for the real thing. So there you go. Always be careful with the FT. FT is a globalist institution. They don't want to see people really outside this financial system. And why is that? Well, because they're sponsored, they're backed, all their advertising revenue comes from the banking system, from Wall Street and the City of London. So with that, let's quickly look at where the markets are this morning. It's fairly early. It's 7:20 a.m. We've got spot gold down slightly here at 1858.50. It's down $2.50. It has been as high as 1866, and the high has been 1855. So precious metals under a little bit of pressure early on this week. Silver as well is down 20 cents. It actually opened up quite well last night. I saw that the price of silver traded above 23 right on the open, went up to 23.11, but as London comes in now, it has dropped. It's at 22.65, down about 1%. The low's been 22.50. The Dow futures up 230, just under 1%. S&P is up 25, 0.75%. NASDAQ is up 0.7%, NASDAQ 100 future. The currencies, we've got sterling up 0.2% at 127.75. The euro is unchanged, 116.30, and the dollar is down 0.25% versus the yen at 105.30. WTI crude is down 0.75%, just under 40, trading at 39.95. And one thing that's really strange lately is the bond market, the treasury market. The 10-year yield has been stuck in a very narrow range. And it's very unusual because I traded as a broker, worked as a broker for over 20 years in the bond markets. And it's unusual to see bonds trading in such a narrow range. The 10-year yield right now is at 0.66. It's been between 0.64 and 0.7 for the last month or so, which is very unusual, and I think we need to keep an eye on that. And I'm not really sure what it means in terms of the overall financial monetary system, But yeah, need to keep an eye on that. So there you go. Yeah, there's no substitute to physical silver or gold. I would avoid ETFs unless you want to keep financing Wall Street and the City of London and the bankers who have been bailed out several times in the last 12, 13 years, who really don't deserve to be running the businesses that they do, in my opinion. So if you enjoyed this video, make sure you hit the like button. Please share it far and wide. Think about subscribing to the channel if you haven't yet. And you can also follow me on Twitter, Facebook, and all these other platforms below here. I wish you all a great day. Take care. Bye.